Just following on from Tuesday's report, we have seen platinum prices. They broke out to 920 US dollars per ounce off the back of Wednesday's FOMC statement. We've also seen gold now break out to all-time record highs, not once, not twice, but 3 times over the last couple of weeks here. So initially breaking out to $2,149 per ounce, then we've seen $2,180 per ounce, and now we've seen an all-time record high of 2,222 US dollars per ounce. And the catalyst for that, again, was Wednesday's FOMC statement. As mentioned to you, we like to use these news items as exit liquidity. So we actually took more profit off the table with silver, 2 trades, each trade banking over 300 points profit. As we saw silver prices, they broke out towards 26 US dollars per ounce. Also, we've taken the opportunity at the beginning of the week, of course, to lock in more profits on oil for 900 points. And it's been very fast profits here on platinum. So we talked you through at the start of the week. Look at platinum here below $900 per ounce. It pulled back down towards 890 US dollars per ounce. And since then, we've actually seen a breakout over 300 point move, taking the price back to 920. That was a very straightforward opportunity. We built into multiple trades there on platinum. We've already started to scale out and bank from our lowest trade, 250 points profit. So in actual fact, just with the oil trades this week, the silver positions, and also the platinum trades as well, we've already booked well over 1,000 points this week with our clients at the Gold and Silver Club. It's just for that calculation. Every 1 lot contract that you would be trading, simple $10,000 of profit. Every 10 lot contract you'd be trading, that's $100,000 of profit. All very straightforward, easy opportunities for you to take advantage of. Now, the reason, of course, I talked you through platinum at the start of the week is it was a very straightforward opportunity. We've been patient for, waiting for platinum to get sub $900 per ounce, literally only stayed below that price for a couple of days, and then we've already been very profitable on that trade. Platinum is still trading above $900 per ounce at the moment. Now, the main trade setups that I'm looking at right now, and this actually was discussed with you on Tuesday, would be the potential, if we get any further dips as we go into next week, for end of quarter profit taking. Remember, next week it's the end of March before we transition into April, into Easter and so forth. And oftentimes when you have seen outperformance on various commodities here, you're going to see rebalancing of portfolios at the end of the quarter, locking in profits. That's what we're very much seeing right now on gold. It broke out to 2,222 US dollars per ounce. Now it's pulled back down towards 2,170 US dollars per ounce. Silver, the same. We were not being complacent at all. We made sure on that breakout above $25.50 per ounce to be locking in profits on that breakout to the upside there. On 2 trades there, we locked in further profits on that very quick breakout off the back of the FOMC statement, similar to platinum as well, making sure that we're just banking into strength, because our expectation here is that we could actually get some outflows between now and the end of the month, the end of the quarter, as we go into next week. Again, the setup I can see for that is that hedge funds and money managers, they've all bought late into the move. Silver, they've done so as well, and gold, and also oils. They've bought much later into the move here. Often what will happen is when the hedge funds finally capitulate and they start buying it much higher, normally they get liquidated. It's been like this over the last year. They get triggered with their trend trading systems, they end up buying it much later, and oftentimes they do actually get liquidated. So I'm just keeping an eye out for that as we go into next week if we do see further profit taking for the end of the quarter, the end of the month as well. Now, of course, where we're positioned right now with gold, it is the strongest out of the metals at the moment. So I am, again, set within the portfolio for much higher prices. Citigroup, Goldman Sachs, JP Morgan, Bank of America, they've all been coming out with their increased price target since the start of the year here as we transition into the commodity super cycle. Cocoa prices, they continue on a weekly basis to break to all-time record highs. Obviously, we've seen gold 3 times over the last couple of weeks here, breaking out to all-time record highs. Silver prices reaching the highest levels in 2024. That's been also relevant to oil, breaking above 82 US dollars per barrel. Multiple commodities have been doing this and transitioning into the super cycle that we're seeing at the moment, even to the point where Citigroup, they're now predicting $3,000 per ounce gold over this year, which right now is not so far-fetched. After Wednesday's FOMC statement, gold broke out 700 points just off the back of that one news item alone. So again, I would definitely have that on the radar throughout 2024, but more imminently here next week, End of the quarter, you could get some further end of quarter profit taking, which again would just be a massive opportunity to reload if we sell off back down towards the swing lows on any of the commodities that I've just mentioned: platinum, palladium, silver, oil, and so forth. So with that, of course, if you would like to join our professional research-driven trading approach, this is where you're not going to be using outdated technical analysis strategies or gimmicky technical indicators. That's all very elementary. You need to really graduate beyond that. Again, technical analysis, fair enough, it's what everybody is taught in the market out there. So you've got absolutely no edge. What you want to do is further compound that and build up your understanding, right? So it's like getting your white belt when you're training in martial arts. Get beyond your white belt and get to the next level. So this is, of course, is where you want to be utilizing data, statistics, market intelligence. Now further compound that with the capital flows in the markets, how the hedge funds, money managers, the banks, the institutions, how they're positioned in real time. Understand and learn the key areas of liquidities. This will help you with your sniper entries and also exiting at the right point in the cycle as well. Take advantage of the daily, weekly, monthly, quarterly, real-time data-driven cycle for each commodity. For investing, obviously that's just long-term buy and hold. That's where you'll be buying an asset and holding it with a much longer term time horizon, but you can make a lot more money trading the markets. This comes back to the point that Goldman Sachs have been stating: we're now transitioning into the golden age of trading. Then further compound that, of course, with the macroeconomics, the fundamentals, the geopolitics, then of course the narratives in the market, the intermarket correlations, the ratios, and finally utilizing data, statistics, market intelligence to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.